Well, third time's a charm. Good morning, everybody. Hope you had a great evening. It was actually warm here yesterday. We got up to 82, 83. Forecast to be in the low 70s here for the next week. No moisture. It is harvest time, so whatever crops were going to be made are made in this part of the world. Interesting evening last night. Kur of the European Central Bank made the announcement the European Central Bank will begin purchases of assets within days. And that came in London, and you'll see when the London market opened, and you can bet your bottom dollar that the Fed and the Bank of England and everybody else knew this at that level, and some of it was leaked out. And right here's the high of the market, and the market went straight down to 27.5 off of that information. The selling continued and took us all the way down to 19, and that put us back into this area right here of 27.20, 27.24. The last rotate down that morning before the market exploded up was 17.5. So we have tremendous volatility. We've got market reversals to contend with, but we're right back again in that situation where central bank screwing with the markets can turn them on a dime. They do it rhetorically. Assets, Nancy, which means securities, which means quantitative easing, is about to begin, or at least rhetorically it has begun in Europe. Just like the United States purchased treasuries of all maturities and mortgage-backed securities to the tune of peaked at $85 billion a month. That's $1 trillion a year. The ECB and everybody said they have to do at least $1 trillion worth of this. Now, whether they do that or not is another matter. Draghi, for the last 2 years, has been able to talk their markets up by hinting at coming central bank intervention. So that statement took the market from here, 28.10.5 to 27.18.5, all by itself, and that's what we face today. So we've been talking about this 27.24, 27.20 area for a couple of days as structural support. Yesterday we came in and we said 28 was support. Right now you got to feel like 28 is going to be pretty good resistance. So I don't think in and of itself that statement has changed anything. Now the markets will have to see if the European Central Bank is actually going to act. So we've added volatility. You cannot trade these markets without stops, like it or not. It gives us wonderful opportunities as traders because of the extra volatility and extra range. Your trading targets can be double or triple what they normally are, or more. But you can't be stupid about this. You can't take a chance of getting nailed. So right now we've come from 19 to 30. That's like almost 3/4 of a point. 128 is going to be resistance. 31 to 03 will be sell 1. And then 7 to 11 will be sell 2. And on the buy side, we have a low at 23. We have a low at 21.5. So 25, 21, fairly aggressive. Buy 1. And then 17 to 13. I don't think you can break the market because what's really changed without central bank intervention? The economy is slowing. Europe is forecast to go into a recession. Inflation is not the problem. Deflation is the problem that's been fought since 2008. It still is, especially in Europe. The conditions economically are still the same. So the central bank is trying to levitate the one thing that they can. The two things they can control are interest rates and the stock market if they're willing to buy securities. Now the Bank of Japan directly intervenes in the stock market. They buy the stock market. Our central bank and the European Central Bank buy treasuries, buy debt, but they charge their their institutions that are basically extensions of their central banks to go out and buy stocks. So our central banks buy stocks too, but not directly, indirectly. So that's where we are. Yesterday's news for the stock market on balance was, from a headline standpoint, was good for the equities, not so good for financials. You read into the paragraphs, you can make a case that the economy is still fairly weak. So here we are, probably going to look at a consolidation type day, buying pretty good market support in that 2720 area. Give or take, we have news starts. Our forecast at 1.02, permits at 1.01, and Michigan sentiment at 84.4. And starts will be the number one focus, and Michigan sentiment will be number two. But once again, the direction of the E-mini trumps all news, and the E-mini is pointed higher right now. 10% correction. The mainstream financial news will just say 10% corrections can be expected anytime. Their definition of a bear market is when it breaks the 20% barrier. We didn't get there. The talk will be business as usual. I really don't think it is. I think that the market's paying a lot more attention to bearish news than it has. But we'll have to see how that plays out in the market. So selling 31s to 03s, 7s to 11s, buying 21 to 25, and 13 to 17. I think the best support's in that 16 to 20 area, but the last rotate down stopped at 23. And resistance, pretty good resistance. We should start seeing some resistance at 28. You know, it is absolutely amazing when you see what is going on from all government agencies, central banks, and the rest of that. What they can do to the market, what they can do to individuals' pocketbooks, what they can do to companies' abilities to finance. You can't, I mean, it's really, really, really hard to believe much of anything anymore. Janet Yellen started talking up the markets over the weekend. Fisher and Bullard came out. Bullard yesterday at 11:24 Eastern came out and said quantitative easing could be extended. In fact, we could start quantitative 4. Markets just roared off of that. These people play with other people's livelihoods, and they really aren't accountable, and they really aren't in a position to be touched by design. They are protected and unaccountable, and for us as traders, it's opportunity. But for people that are making long-term investments or people trying to live off their savings, I mean, there's been some super damage done, and none of it will ever none of these will ever come to roost. Okay, London's last rotate up was 22. We're currently at 11, so 15 to 19 is just inside of that. Sell 1, fairly aggressive. 23 to 27 is not super aggressive. On the buy side, we have a low of 8. We're at 12. We have a low of the buck. Got this pretty clean break right here. Going to give it a little room, 1 to 5, on the assumption that the stock market might rally a little bit this morning. It is pointing higher than 25 to 29 for buy 2. You know, I really, there was somebody wrote an article, and he used the word authenticity was really the problem with government agencies and the government that really is totally out of control. It's so big, nobody knows how big the government is. They don't know how to control it. Everybody gets funded plus 3% per year. But when you look up the definitions of authenticity, it's the real thing. It's not a counterfeit. And when you look at the government aid titles and what they are by law and by Constitution, and the rest of it are forming documents required or tasked to do, then you bounce them off the word authentic. And I mean, it really leads you to question if there's any competence or any desire at all to do what they're supposed to be doing. You know, what's their purpose? What's their function? Why are they there? Why do they make these exorbitant sums of money and disperse exorbitant sums of money? It's just doesn't make you very comfortable. Okay, 40.42. If the stock market sells, we'll probably head up. This is resistance, sell 1, and then we're back to our 45.47 for sell 2. On the buy side, we still like that 35 area plus or minus, just like last night. And then 30.32. I mean, if everything is done for political expediency and to shift the blame to other people and to keep things going as they are and keep the game going, I mean, what is the purpose and role of government these days? It really leads you to question almost everything they do. It's not comfortable. Okay, looking at the euro. The euro really should be selling off the news that they're going to step up. They haven't done it yet. So right now it's rhetoric. I remember 2 sells band held last night. That'll be sell 1. And then our 75 to 85 will be sell 2. 28 even plus or minus by 1. And the last rotate down yesterday stopped at 65. We got a little dent at 75. 65 to 75 will be by 2. I agree with you, Charles. It really should be selling. But, you know, it's not for us to reason or know why. It's for us to do or die. That's kind of where we are as traders, if you think about it. We just take the information we got and we trade it. And, you know, that's not bad. Think about these guys that have to invest on a 2 or 3 year horizon. They have a much more difficult job than we do. And why is that, Fitzroy, that they can't print money? Because of each EU member has their own central bank, or I know they have rules that you can only have X amount of budget deficit, which now France has broken it, but the PIGS nations have broken on a regular basis. So Germany. Okay, crude is very, very volatile, getting big swings. It's not based on supply. A lot of articles came out yesterday. Saudi Arabia has gotten a message from Al-Weed, and from our Barack Obama has gotten a message from our shale producers, etc. So somebody, you know, quietly has moved in and gotten the world's biggest players to stop selling. That's hard to believe. These guys are only in it for These world's largest players will crush a country's currency to make money. It doesn't make any difference to them. But rumors and whispers, etc., can really move markets. But the bottom line is crude can move $4. It's done it twice now, just off of short covering or new shorts being established. Right now we're at 83.62, 84, 84 and a quarter, sell 1. 50 to 75, sell 2. On the buy side, London's low was 82.50. So we've got this 83 area down here. So 83, 83 and a quarter. Just got to give it some room because of the volatility. Then 82.50 plus or minus for buy 2. Don't know if we'll get there. We've got our setups. We don't have to really worry about it too much. Okay, Rich reminded me we will be trading DEES tomorrow in crude, or Monday on rollover. So may want to change, definitely change them on the close this afternoon. I still have back in my day, and it doesn't trade. The contract actually does. Large institutions move over 1 to 2 days before. Rich says change it today. I'll go back and I get done with this. Okay, the E-mini. That statement yesterday by Bullard, 20 points in 1 3-minute bar. Is what the market did. Kur from the European Central Bank. We're up 25 points from yesterday's close. So here's when he spoke, and here's where the structure is. So we have this London high over here that I think is significant. We retested it. It is held. We're down at 71. We had a breakout from 65. We're at 71, and we had the news hit at 55. So, and London starts up at 59, the second leg. So, first buy 65 to 67, and then 59 to 61 for buy 2. Sell is well, it's going to be 75 to 77. That's resistance. And then 80 to 82, leaning against that 83 from the other day, that high, and then that night session. So news today, permits and starts usually don't get a lot of attention. If the numbers come in forecast, it will help the Fed's financial projections of 3% growth second half of this year and 3% for next year. And back in the old days, the United States was the engine of the world's growth, and we could go it along, but that was coming out of recessions. And the way that it's done these days, with China, the rest of them, we may not have the clout that we used to have. Okay, it'd take at least 20 minutes to get everything up and posted. I'm going to get busy on that. Be back as soon as I can.